Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Teddy Fusaro. He is president at Bitewise Investments. Great to see you, Teddy. Thanks for joining me.
It's great to be with you, Junie.
Thank you. So Teddy, tell me, with today's market volatility, how can investors best manage their risk?
Judy, I think that what's really important for advisors and their clients in today's market is to really think about position sizing. I think where we've seen investors who have gotten into difficult situations recently is if they haven't had their allocation sizes figured out properly. We at Bitwise manage crypto portfolios and crypto products, and a lot of times what we're talking to investment advisors about is how small, very small allocations in a broad and well-balanced and diversified portfolio can have a positive effect over the long term on risk-adjusted returns, but only when sized appropriately.
Okay, so now Teddy, tell me, what are you hearing from institutions, advisors, retails right now?
Yeah, so we mostly hear from institutions and investment advisors. And I think that the story of the year, last year, leading up until about February or March, was really about inflation expectations. And that has really kind of come to fruition in the last 3 or 4 months. And now investors are figuring out how to navigate this landscape where we're having really nowhere to hide in the markets. We have equity markets down, whether that's large cap, small cap, tech, growth, value. And the conversation that we're having with investment advisors is, where do you turn in this type of market environment? And I think we're seeing more investors who are considering alternative assets as allocations.
All right, and finally, Teddy, tell me, how can your investment philosophy / active management help investors to navigate market volatility?
Great question there, Judy. What we've seen, I talked a little bit about portfolio sizing and about risk-adjusted returns when including an allocation to crypto. One of the things that we've found to be the most powerful over the long term is when you do get your allocation to crypto, to make sure that you are rebalancing that exposure appropriately. What I mean by that is when your position increases in size, increases in value, you're taking a little bit of that exposure off the table, bringing it back down to the initial allocation size that you started with. And similarly, when the market pulls back for crypto, you're maybe feeding a little bit more of your assets into the market to bring it back up to where it was when you initially started. And when we see investors who are intelligently rebalancing across these ups and these downs, that's when we tend to see the disciplined investors have long-term portfolio outcomes that can benefit from the lack of correlation and the volatility that exists in the crypto marketplace.
All right. Well, Teddy, wonderful to talk with you. And that's ETF Leaders, powered by the New York Stock Exchange.